37% wiped out in a single day, with no news, no announcement, no trigger of any kind. That is not a normal crash. That is an execution. Silver was trading at $121 on Friday morning, confident and euphoric, and within just 6 hours it collapsed to $75. $46 erased almost instantly. Gold followed, plunging from $5,600 to $4,700. $900 gone. And here's the part that should make you uncomfortable. No war broke out, no pandemic emerged, no bank failed. There was nothing on the news wires, no breaking headlines, total silence from every major outlet. Yet we just witnessed the largest single-day crash in precious metals in years, and nobody seems able or willing to explain why. But I can. And when you see what I uncovered, you'll understand why this keeps happening, why it happened in 1980, why it happened again in 2011, and why it just happened now. 3 times in 50 years. Same pattern, same tool, same destruction. This is not conspiracy, this is documented history, and you're about to see it clearly. Welcome to the hidden economy. If you're new here, this channel exposes what's really happening in markets, while everyone else is distracted by headlines. Subscribe now, because this kind of analysis doesn't exist anywhere else. Friday morning, January 30th, the final trading day of January and the last session of the week. Silver was sitting comfortably at $121 after the strongest January rally in decades, 65% gains in just 30 days. Sentiment was euphoric. Analysts were calling for $200, even $300 silver. Social media was convinced this was the rally of a lifetime. Everyone believed they were early, everyone thought they were getting rich. Then 9:30 a.m. hit. New York opened, and within seconds, a tsunami of sell orders flooded the market. This wasn't retail traders taking profits. This was institutional scale selling, massive blocks, millions of ounces dumped simultaneously, coordinated, surgical. Silver fell from $121 to $115, then $110, and then shattered below $100, the psychological level everyone swore would never break. Support didn't fail slowly, it was obliterated. 95, 90, 85, 80, stop losses triggered everywhere. Margin calls exploded across accounts nationwide. Traders weren't choosing to sell, the system was selling for them. So what changed? According to the official story, nothing. Just a healthy correction. Markets got ahead of themselves. That's the cover. Here's the reality. Look at the 60 days leading up to Friday. December 12th, silver surges, headlines everywhere. Quietly, the CME Group raises margin requirements by 10%. December 29th, silver keeps climbing. Margins raised again, this time aggressively. A 25% jump overnight. December 30th, less than 24 hours later, they do it again. 2 hikes in 2 days, something that almost never happens. Then January 28th, just 3 days before the crash, they changed the entire system, switching from fixed margins to percentage-based margins. 9% becomes 11. Riskier accounts jump to 12.1%. 4 margin hikes in 6 weeks. An 80% increase. Margin is the cash required to hold a futures position, your collateral. When margins rise, every trader must immediately add more cash. Not next week, not later, now. And if you can't deposit that money within hours, your position is liquidated automatically. Imagine your rent increasing 80% and being told you have until tonight to pay or you're evicted. That's the call silver traders received simultaneously. Most couldn't pay. So the system sold them out. And when thousands of leveraged positions are forced to sell at the same time, prices don't drift down, they collapse. This wasn't fair price discovery, this wasn't a bubble popping. This was a trigger pull, and it's been done before. In 1980, silver surged from $6 to $50, an 800% gain. The response? Silver Rule 7, leverage buying banned overnight. 100% cash required. At the same time, the Fed jacked interest rates from 11% to 20%. Silver collapsed from $50 to $10, an 80% wipeout. In 2011, silver ran from $8 to $50. Retail flooded in. Banks with massive short positions were bleeding. The CME responded by raising margins 5 times in 9 days, an 84% increase. Silver crashed to $26 and took 13 years to recover. Now it's 2026. Silver exploded from $26 to $121, the biggest rally in modern history. The response? 4 margin hikes in 6 weeks. The result? A 37% crash in a single day, the fastest destruction of all 3 events. 1980, 2011, 2026. Same setup, same weapon, same outcome. Once is an accident, twice is coincidence, 3 times is a pattern. So why does silver need to be crushed this badly? Because silver isn't just metal, it's a signal. It exposes the weakness of the paper system and threatens the dominance of the dollar. The United States' real power isn't military, it's the world reserve currency. Every nation needs dollars to trade, to buy oil, to hold reserves. That's why America can print endlessly and still survive. But that system is cracking. Central banks bought 800 tons of gold last year. In January alone, they dumped $48 billion in U.S. treasuries. The dollar's share of global reserves just fell to 58%, the lowest since 1995. And here's the most dangerous shift of all. For the first time in modern history, gold now makes up a larger share of central bank reserves than U.S. Treasury bonds. The world trusts metal more than promises. China, Russia, India, Brazil, South Africa. The BRICS nations are leading the move. And when silver starts screaming that truth too loudly, the system responds the only way it knows how, by crushing it. They are building payment systems that bypass the dollar entirely. Trade is being settled in local currencies, not dollars. And they are hoarding gold as if their survival depends on it, because it does. Now look at what China is doing next. China controls between 60 and 70% of global silver refining. Not mining, refining. That distinction matters. Silver is mined in Peru, Mexico, and Australia, but it is processed in China. China is the gatekeeper. Without Chinese refineries, the global silver supply chain simply breaks, and silver is only the beginning. China processes 90% of the world's rare earth elements, the materials inside your phone, your laptop, electric vehicles, advanced weapon systems. 90% of it runs through China. They control 98% of gallium refining, a metal critical for semiconductors. They control 80% of cobalt processing, which goes into every lithium battery and electric vehicle. They control 60% of lithium refining itself, the backbone of the entire green energy transition. The modern economy runs through Chinese processing facilities. Every piece of advanced technology, every military system, every future-facing industry depends on materials China controls. And on January 1st of this year, China officially classified silver as a strategic national security resource. Export controls were imposed, same category as military materials. That alone should stop you cold. What you are seeing now is a clash between two superpowers with two completely different visions of the future. China wants a world where physical resources matter, where metals have real value, and where the nation that controls supply chains holds the power. They spent 30 years building that position. Now they're using it. America wants the opposite. America needs metals to stay cheap. It needs gold to stay quiet. It needs your wealth parked in dollars, treasury bonds, and financial assets that can be monitored, inflated, and controlled. Because if silver goes to $500, what does that say about the dollar? If gold hits $10,000, what message does that send to the world? It says the paper has failed. It says 50 years of money printing has finally caught up. It says the game is over, and that message cannot be allowed to spread. So silver gets crushed, just like 1980, just like 2011. Margin hikes, forced liquidation, price destruction. While that happens, China keeps buying physical metal. They keep draining vaults. They accumulate while the West panics and sells. This is not market management. This is financial warfare. East versus West, paper versus metal, dollars versus commodities. And on Friday, you watched a battle in that war play out in real time. The dollar itself tells the same story. The dollar index had been falling for months, sliding from 110 down to 95.55, a 4-year low and the weakest dollar since 2022. And when the dollar falls, gold and silver rise. Metals are priced in dollars globally. A weaker dollar means it takes more dollars to buy the same ounce of metal. More importantly, a falling dollar signals declining faith in paper money, pushing capital into hard assets. That's why dollar weakness has always fueled precious metals. But something critical happened at 95. Right at that 4-year low, the dollar stopped falling. It found a bottom and began to reverse. And at that exact same moment, metals collapsed. The dollar turns up, silver crashes 37% in a single day. You really think that's coincidence? Margin hikes created forced selling. Forced selling crashed the price, and the dollar reversal gave the system a clean cover story. Metals were just overbought. The dollar is recovering. Everything is normal. This was coordination, the system defending itself on multiple fronts at once. Now look at the physical silver market. Before Friday's crash, when silver was still trading at $121, mints around the world were already struggling. The Perth Mint suspended wholesale orders because demand overwhelmed supply. The U.S. Mint halted Silver Eagle sales. Dealers defaulted on deliveries. At $121, you still couldn't easily buy physical silver. Now the paper price says $75. Try buying an ounce today. Call a dealer, check online retailers. Look at the premiums. Look at the empty inventory. The paper price says one thing. The physical market says something very different, because paper silver and physical silver are not the same asset. Friday proved that beyond any doubt. Paper can be created with a keystroke. Paper can be crushed with margin hikes. Paper markets are controlled. Rules changed overnight. Positions liquidated on command. But physical silver cannot be printed. It cannot be margin called. It exists outside their system. When you hold physical silver, nobody can force you to sell it. Nobody can change the rules and take it away. Two markets, two prices, two realities, and they are diverging faster every day. While America was panic selling on Friday, China was buying. Shanghai vaults drained 27 tons of silver in a single day last week. Not sold, removed, physical delivery, actual metal leaving the vault. This has been happening for months. While Western traders shuffle paper contracts, Chinese buyers keep taking delivery. The metal keeps moving east. America dumps promises. China loads trucks. America crashes the price. China says, thank you for the discount. So ask yourself, who really understands silver's value? Who's playing the long game? Because the fundamentals did not change on Friday, not even slightly. Silver has been in a supply deficit for 5 straight years. Since 2021, more silver has been consumed than mined every single year. The cumulative deficit now exceeds 800 million ounces, nearly a full year of global production that simply does not exist. Industrial demand is exploding. Solar panels, EVs, electronics, AI data centers, military systems all require silver, and demand is accelerating. Meanwhile, supply is constrained. No major new discoveries, declining ore grades, rising production costs, a decade-long timeline to bring new mines online, demand rising, supply tightening, deficits growing. None of that changed because of one violent paper crash. What changed was a number on a screen, controlled by futures contracts and margin rules. Paper prices can be manipulated. Physical supply and demand cannot. After 1980, silver recovered. After 2011, silver recovered. Both times it went on to make new highs. They can suppress prices, but they cannot do it forever. Eventually, physical reality wins. It always does. Do I know if $75 is the bottom? No. Could silver fall to $50? Absolutely. Could it rip back to $100 next month? Also possible. Nobody knows. Paul and anyone claiming certainty right now is lying or selling something. But here's what is certain. The CME raised margins 4 times in 6 weeks. Silver crashed 37% at the end of that sequence. This exact pattern has occurred twice in 50 years, and both times silver eventually recovered. China controls most of the world's silver refining and just imposed export controls. Central banks are dumping U.S. treasuries and buying gold at the fastest pace in decades. The physical market was already broken before Friday, and now the gap between paper price and physical reality is wider than ever. And that's the part I can't stop thinking about. If silver truly didn't matter, why do they keep doing this? Why run the exact same playbook 3 times in 50 years? Why coordinate margin hikes right before major crashes? Why does the CME care this much about the price of a single metal? They'll tell you it's risk management. They'll tell you it's about market stability. They'll say they're protecting traders. But look at what actually happened on Friday. Traders were obliterated, billions in losses, accounts wiped out, years of gains erased in a few hours. That isn't protection, that's destruction. So if they aren't protecting traders, what are they protecting? The answer is obvious. They're protecting the dollar. They're protecting the system. They're protecting the narrative that paper money still works. Because every time silver starts to run, every time it threatens to expose that illusion, it gets crushed. Not once, not twice, 3 times in 50 years. They simply cannot allow it to trade freely. And that fact alone tells you exactly what silver threatens, and exactly what they fear. In 1980, they said they crushed silver to stop manipulation. In 2011, they said margin hikes were necessary for market stability. In 2026, they'll tell you this was just a healthy correction. Normal behavior, nothing to see here. But now you can see the pattern clearly. The margin hikes, the coordination, the timing, 1980, 2011, and now. At the same time, China accumulates physical metal while America dumps paper. Central banks choose gold over U.S. Treasury bonds. The signals are everywhere if you're willing to look. Here's what they don't want you to understand. The paper price says silver is 75, but paper is just a claim, an IOU, a promise that can be manipulated, margin hiked, rehypothecated, or defaulted on at any moment. Metal is real. It exists in the physical world. It cannot be printed by a central bank. It cannot be hacked. It cannot be frozen with a keystroke. It cannot be margin called out of your possession. They can crash the paper price. They cannot crash the metal itself. They can liquidate futures contracts. They cannot liquidate physical silver sitting in your safe. They can manipulate markets, but they cannot manipulate reality forever. They can print trillions of dollars out of nothing. Silver cannot be printed. One of those has to win in the end, and history has already voted on which one does. A lot of voices are going to tell you to sell now, to cut your losses, to get out while you still can. And maybe they're right in the short term. Silver could absolutely go lower from here. I genuinely don't know what happens next. Nobody does. But ask yourself one simple question. If silver were truly worthless, if gold were just an outdated relic, If precious metals were genuinely irrelevant in the modern financial system, why would they need to do all of this? Why raise margins 4 times in 6 weeks? Why deploy the exact same playbook across 5 decades? Why would China be stockpiling physical metal while America crashes the paper price? You don't fight this hard against something that doesn't matter. The intensity of the attack tells you the value of the target. Remember that when you make your decisions. Friday wasn't just a crash, it was a message, a reminder of who controls the paper markets, a demonstration of power. But it was also something else. It was confirmation. Confirmation that silver still matters, that precious metals still threaten the system, that, after 50 years of fiat money and unlimited printing, they still haven't figured out how to make gold and silver irrelevant. They called it a crash. I call it a crime scene. They called it volatility. I call it the same playbook running for the 3rd time. They called it risk management. I call it the system telling you exactly what it fears. 37% in a single day. No news, no explanation. Now you know why. The margin hikes, the playbook from 1980 and 2011, China versus America, paper versus metal. A financial war nobody talks about. The data is public, the dates are documented. The pattern is there for anyone willing to see it. What you do with this information is entirely up to you. This is the you-known hidden economy.